Hello, Alexander here. This is practice exercise 7-2A, Perpetual Inventory using FIFO. So this is chapter 7. Here's a scenario. Beginning inventory purchases and sales for item B901. And B901 can be anything. Using FIFO, most of the time grocery stores use FIFO, as do restaurants. So item B901 could also be milk. It could be the steaks that the restaurant's using. It doesn't matter. It's just using FIFO, so the first in, first out, which means whatever the inventory is in the beginning is what gets sold first, and the newer inventory that comes in is sold last. So August 1st, we have inventory. Here's the transactions that happened. So I'm starting with B, scenario B, which is what's the inventory on August 31st? And so what this means is August 1st, our starting inventory is 50 units at $80. On the 9th of August, we sold 30 units. Now, don't get tripped up here. 30 units. Sometimes in a problem, it'll say 30 units at maybe 160. Don't ever use that number. That's a sales number. That's not anything to do with cost of goods sold. So disregard anything. If it says sale, it doesn't matter what you sold it for. What matters is what it costs to you. Because sales is totally different. That's just for the income purposes. But for cost of goods, we actually want to know what we paid, what we bought the goods for, what the cost of the goods it was to us to make it. So we sold 30 units at whatever it was, which left us, this is at 20 units at $80. So we sold 30 units off of our 50, left us with 20. That was the only units we had, and it's worth $80 each. Next, on the 15th, we purchased 40 more units at $85, so inflation. This is the same item, same milk, same steaks, but now we're paying $85 a pop for each one. And then here on the 28th, the sale, we had another sale for 25 units. We sold 25 of these puppies. But, gotta be careful here, we take the 25 from the oldest first. So we take all these 20 go away. All 20 units at 80 go away. Now it leaves us with 5 left. 5 is now taken away from the 40. Bam. We have 35 units at $85 left in inventory. So that's B. That's A, that's A. Oh no, that's B. Yeah, that's B. My apologies. So we have 35 units at $85 for B. That's how much the cost of inventory is per unit for us, and the level of inventory. And then for A was what's the cost of goods sold on the 28th. And so what that means is we took 20 times 80 plus 5 times 85, some algebra. That's the good part of accounting is if you took algebra, you're going to be using it in accounting. It's a great way to get practice. So we times 20 by 80 gives 1,600 plus 5 times 85, it gives you $425. And together you get $2,025 worth of cost of goods sold. So that's how much we sold of inventory, cost of goods on the 28th. So thank you. Please like, comment, subscribe, and I'm going to keep going along with these. Hope this helps, and I will see you for the next one.